Hey everyone, Coach Investor back to another video for today. So let's talk about Alibaba. I know a very controversial topic to talk about when talking about investing in Chinese companies. I know. I'll try and make my case here because there is some interesting things going around. Not all Chinese companies are down a lot, which means plenty of people have no issue in making money while investing in Chinese companies. Of course, there's always a risk. I'll go through that as well. But first, I want to talk a little bit about China, the Chinese economy, and how things are going there. So first up, I want to touch on China's real GDP, the growth expectations there. So according to the conference board, they forecast China's real GDP to expand by 5.2% in 2023 and 4.1% in 2024. Looking forward, the potential at which the Chinese economy could grow, where labor and capital are employed at their maximum rates, will slow down from an average of 4.1% per year between 2025 and 2030 to 3.7% between 2031 and 2036. This slowdown in potential economic growth is normal for economies that are maturing. Of course, they then talk a bit about the geopolitical tensions and stuff like that. But there is more. Remember the whole real estate thing happening in China, and then all the doomsday scenarios headlines came out, which again, a lot of it was warranted because if things got even worse, then yes, it could have been a huge problem, not just for China, but for the rest as well. Well, if we go and look at this chart right here, this is China's property price year-to-date average overall from 1995 until October 2023. Now look, we peaked here January 2021, and then of course we saw that huge crash until the beginning of last year. But since then we have seen a nice little recovery here, and yet not a lot of people are talking about that. If we look at China's inflation rate, we see that it peaked here in September 2022, 2.8% there. We're now at actually a negative 0.5%. Then if we go and look at China loan prime rates, back in 2019 we were closer to 4.3%, we're now at 3.45%. So as you can see, things are getting a bit better already in China. Of course, things get way worse if there are some geopolitical issues happening there in the region. If somehow they're starting again with lockdown, stuff like that, then yes, that can impact it negatively. They're dealing with deflation right now, not inflation, deflation. Some say this is extremely bad, but in my opinion, I'd rather have and deal with deflation than uncontrolled inflation. They're going to stimulate the economy as well. So things are getting better for the Chinese economy. Now, if things are getting better for the Chinese economy, this means that Chinese companies should definitely get some boost as well. Well, we've seen the boost happening already with a couple of companies. For example, Pinduoduo. We covered that on the channel. Pinduoduo is growing like crazy. And actually, if you look at Pinduoduo's market capitalization, it is now officially bigger than Alibaba. Alibaba sits at $181.5 billion. Pinduoduo sits at $190 billion. I'll explain a bit more in just a second. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, we'd really appreciate that. And if you want to support me even further, do check out the link down in the description and in the pinned comment to get a top 10 best stocks to buy now, or go to full.com/couchinvestor. Thank you very much. So going back to this right here for Alibaba, to me, this is actually incredible. We all know that if this is what you looked at, and I said this is not a Chinese company, this is an American company, headquarters in California, New York, you name it, everyone would be buying this like crazy. I mean, PE, forward PE, 7.7 times. EV to EBITDA, 4.9 times. Price to sales, 1.3 times. And this is the craziest stat here. Price to free cash flow, 7.3 times. That's it. This is Alibaba right now. Year to date, it's down close to 19%. Since last year, it's down 21.8%. Now, if we go and look at their latest earnings report, we can see that revenue increased 9%. Net income is at $3.65 billion. Of course, last year profitability was not that great for this business. But look, revenue up 9% year over year, net income $3.65 billion. Remember those numbers? Because if we go to Pinduoduo, we see here total revenue $9.43 billion. So basically, Alibaba generates 3 times more revenue than Pinduoduo. But if you look at net income for Pinduoduo sits at $2.12 billion. So despite them having 3 times less revenue, when it comes to net income, they're only generating around 50% less. But if you look at their growth rates, total revenue has increased 94%. Net income has increased 47% year over year. So, like I said, there is here increased competition from Pinduoduo on Alibaba. It's not just geopolitical issues, because if that was the case, then something like Pinduoduo would not have been up a lot more than Alibaba this year, would not have been growing this fast either. And I mean, if we quickly look at Pinduoduo here, forward PE 23.2 times, price to free cash flow 16.4 times, price to sales 4.6, EV to EBITDA 16.2 times, still below its mean, it's actually 5-year mean. Despite growing extremely fast, it still is reasonably priced. Year to date, it's up 75% as well. Now, of course, with Alibaba, we know that things are becoming better when we look at the bottom line as well, which is also why you see free cash flow per share increasing. You see them buying back more shares as well. And the EPS estimates for the 5-year growth rate sits at 17.45%. So yes, this is definitely not a dead company. It's a company that continues to grow, and operationally wise, they are becoming more efficient as well. There's also still those spin-offs happening, not for the cloud intelligence group, that's not happening anymore, but for the rest, those are still happening and on track for, I believe, next year or so. Now, I quickly want to go back to the different segments for Alibaba. So we know that overall revenue, consolidated revenue increased 9%. Let's have a look at the different segments here. So Taobao, Tmall Group, we can see that there we increased around 4% year over year. If you look at the international segment, that is increasing and growing much faster. We're up 53% year over year. And this is the group, the segment that is definitely competing with the likes of Temu. Temu owned by Pinduoduo Holdings, something that is growing very, very fast internationally. Now, how do they make money? How do they make profits? I don't know, because things are extremely cheap there. They also offer free returns, free shipping. So yeah, I don't know how they're making a profit there, but it is growing quite fast. Then with the rest here, local services group that increased 16%. China Smart Logistics is basically the logistics network, up 25%. The cloud group, that's the one that is really lagging here. Growth only 2% there. Then digital media entertainment, that's up 11%. So you can really see that probably domestically, they're not growing as fast as they would like, which is probably because of the increased competition that they have there. But internationally, they're still doing and growing quite well. Now, if we go and look at the graph right here, we can see that back in November, October 2022, we're actually a bit lower than we were today. So we're back at $64, $65 or so. But remember, last year, the business itself wasn't as profitable as it is today. It wasn't generating the billions of dollars of free cash flow that it is generating today. Today, the business is doing much better, and yet we're not that far away from that same price. If we look at RSI, we are pretty low, but not oversold. But the overall, the topic of this video is, could Alibaba double next year? I think it could easily double next year, not because the business should accelerate or grow its revenue by 50% to match Pinduoduo. Not just the fact that the market will maybe put a higher valuation, put a premium, let's say, on this stock. We've seen how cheap this is right now. Just by, doubling the forward PE, doubling price to free cash flow, EV to EBITDA, stuff like that, that would make this stock jump. Put it on the same, I won't say put it on the same pedestal as Pinduoduo, because Pinduoduo is growing much faster. And on the profitability side of things, we've seen net income isn't that far away from Alibaba, but just an increase in forward multiple, and this stock will definitely jump up. Now, touching on the fact that this is a Chinese company, you don't want to invest into Chinese companies, stuff like that, I can completely understand. But looking at Pinduoduo, who is up 75% this year only, this shows you that people are making money by investing in Chinese companies. This means that people are saying, okay, I think there is money to be made here. Let me buy that stock. I make my money and then go away. Because if it was not the case, if you could not have been making money with Chinese companies, if it was that bad, then stocks and companies like Pinduoduo would not have been up that much. And so, in my opinion, in my view, there is money to be made here with Alibaba. Of course, you don't have to be a long-term shareholder if you don't feel comfortable, but I mean, you're an investor. If you want to make some money off the backs of the Chinese Communist Party, maybe this could be the opportunity. Again, everybody can choose whatever they want to do, whatever they want to invest in. I just think that right now at $71, looking at how the business is doing right now, it doesn't really make that much sense, especially if you compare it to other Chinese companies. So that will be it for this video. Of course, do share your thoughts down in the comments below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye bye.